Hi, this is Groww, and today we will tell you about a unique product which will get you free life insurance plan along with your mutual fund SIPs. This product is called SIP with insurance. I'll tell you what exactly is this product, how does it work, what are the requirements, what are its pros and cons, and who should opt for this SIP with insurance plan. But before that, don't forget to like this video and subscribe to the channel. Now let's begin by understanding what is SIP with insurance. A few mutual fund houses have started offering an optional facility of group life insurance cover free of cost to investors who invest via monthly SIPs in predefined schemes. This feature provides coverage against the uncertainties of life besides enabling investors to accumulate wealth. Now, what are the objectives behind this product? First, to encourage the SIP investors to continue their SIP contributions. Second, to incentivize investors to stay invested for the long term. Third, to secure the family independence of the investor in achieving their crucial financial goals in the event of the unfortunate death of the investor. Now let's talk about what are the requirements of SIP with the insurance schemes. The first one being the age. Individual investors aged above 18 years are eligible. Second, the maximum age limit varies with the providers but is generally around 50-55 years. Third, SIP should continue uninterrupted for a minimum of 3 years. But the insurance cover continues till the time no withdrawals are made or you reach retirement age, whatever comes first. Now, how do SIP with insurance schemes work? Under this scheme, mutual fund houses offer a free of cost term insurance coverage to their SIP investors in selected schemes. The cost of insurance cover will be completely borne by the asset management company, that is the AMC. Term insurances are the simplest and the purest form of life insurance. It provides financial protection to your family at the most affordable rates. The benefit amount is paid out to the nominees in case of death of the person insured during the term of the policy. Since these are group insurance policies, otherwise general requirements are not required, such as basically no medical tests are required, no declaration of good health is required. Interestingly, the cover generally starts from the first SIP itself. Now the question arises, does it affect your SIP? And the answer is no. SIP works the way it normally does. Now, how much insurance cover do we get? The cover amount is different for different AMCs and it is calculated on the monthly SIP installment amount. Generally, the insurance coverage structure goes as follows. Amount in the first is equal to 10 times your monthly installment amount. Amount in the second year is equal to 50 times your monthly installment amount. And amount in the third year and onwards is equal to 100 times your monthly installment. In most schemes, a maximum coverage of 50 lakh per person can be availed per AMC. However, you must check with the scheme you want to invest in. Now let's understand this with a simple example. Suppose your monthly SIP amount is equal to 10,000 rupees. So the cover in the first year will be equal to 10,000 into 10, which is 1 lakh rupees. Cover in the second year will be equal to 10,000 into 50, which is 5 lakh rupees. Cover in the third year will be equal to 10,000 into 100, which is 10 lakh rupees. Now, who is covered under the term insurance policy? Only the investor or the unit holder himself will be covered under the policy. In case of multiple holders, only the first holder will be eligible for the insurance cover. Now, let's talk about the cases where your insurance cover may be seized. Number 1, when SIP is discontinued before 3 years. Second, failure of payment for 3 successive months. Third, once the investor reaches the designated maximum age limit as per the scheme. Fourth, withdrawal of units either partial or full before the term of scheme is up. Fifth, switching to a different scheme. The above are some of the common scenarios, but each mutual fund scheme has its own set of terms and conditions. Hence, we would encourage you to research well before investing in any of these schemes. Now, who should opt for this scheme? People who are not able to get a term insurance plans due to medical conditions can opt for this scheme. People who want to enjoy additional life cover for free. Here are some of the few mutual fund schemes that are available in the market that are offering SIP insurance. Now, what are the benefits of this? No medical tests are required to avail the insurance coverage. Free insurance cover. You can get maximum up to 120 times free group life insurance cover on your monthly SIP installment amount. Long-term growth. Your money grows as per fund's performance. Since you invest for the long term, this works best in your favor. Now let's talk about the disadvantages. Limited options are available right now. Investors may neglect returns just to enjoy the benefit of free insurance. The insurance coverage can't be a substitute to regular term insurance plans. They can only be considered an additional cover and not your primary safety net. Investors are expected to be locked in for a certain number of years, generally 3 years, to make sure the insurance covered is not seized. So what's the bottom line? What's the takeaway from all of this? The primary objective of investing in mutual funds is to achieve one's financial goals and create wealth as per his or her investment horizon, risk appetite, and asset allocation strategy. Hence, one should invest in mutual fund schemes offering free life cover only if they have an excellent track record of beating their benchmarks and peer funds in the past and have enough potential to continue to do so in the future. However, investors should continue to review the performance of these funds at periodic intervals. The availability of free life cover should never influence the decision to invest in or redeem these funds. So I hope you found this video helpful. If you did, then don't forget to like this video and subscribe to the channel. We don't recommend any stock or fund, and all of this is just for educational purposes. On that note, here's me, Groww, signing off. Bye-bye, take care, keep calm and invest on.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.